So we trademarked the three payday system, which is how we exit properties. But the long and the short of it is it's upfront money, which you get when you do a deal normally in real estate. Great.
hmm
Then once you do that, you launch a cash flow stream every single property for two,
hmm
3, 4, 5, sometimes 10 years. And then of course you have the long-term cash out, which is kind of the wealth building side.
All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and I have an exciting guest with us here today. We have Chris Prefontaine. How are we doing today, Chris?
I'm doing awesome, Aaron. Thanks for having me back. Good to hang out again.
Absolutely. Now, Chris, I always like having you on the show here. I know we did a podcast and a webinar together years ago. You know, you're a real estate coach, you're a real estate investor, you're actually in the business doing what you preach as well. You have a large following in the Northeast here and really all around the country. So glad to connect with you again. How's business going on your end?
Business is good whenever there's, as you know, we talked a little bit offline, whenever there's uncertainty, whenever the media is screaming anything that's not the norm, then it kind of drives the creative niche for us. So it's been awesome. Awesome few years.
Yeah, well, as Warren Buffett says, right? Or well, maybe it's Warren Buffett. I guess he kind of made it famous. The line, right? When others are fearful, be greedy. When others are greedy, be fearful. And it does seem people are fearful right now. There's a lot of money sitting on the sidelines, which makes no sense to me because real estate's on sale, commercial real estate at least. We're finding great deals.
Yeah.
Properties we used to be buying at 4.5 caps are selling for 6 caps now, and they're the same property, and rent's still going up. So people still need a place to live. So I just think that it's a great time to be buying real estate. But before we get into all that, Chris, maybe just talk a little bit about yourself, your story here briefly, and then kind of what you focus on in the market.
Sure. I've been at this 34 years this fall, so I'll give you a 10,000-foot view as always, and you can peel me back to any piece of it. So I've been at this since early 90s, participated in building what we called spot building and single lots all those years on terms. We would have the owners and the subcontractors wait for us till the end. I was in my 20s, so we naively asked for that and got it in that market. We then opened up and successfully built and sold to Coldwell Banker a franchise. Conventional, put my broker hat on, never did that. And then running up to the crash, as you may recall, I had 20 plus properties, all different stages of development, raise the roof projects, condominium projects, conversion projects, and then commercial mixed use. And all of those went south with the crash. So that
Mm-hmm.
was the impetus. And the reason I share that is that was the impetus to do what we do today. So
Mm-hmm.
since 2012 till now, so whatever that is, 13 or so years, we've been buying creatively. I rewrote kind of my own personal rules, but we refuse as now a community to sign personally on any bank loans, to use gobs of cash. And the other thing we put into play, Aaron, I don't know if we talked about it last time, is when I started making a list of things I want to do differently, right? After I get my head kicked in financially and mentally, I said, all right, I don't want to be on the treadmill anymore. Like I had been a broker, I'd been a builder, I've done all these things. And I'm like, okay, those were
Mm-hmm.
good money, good experiences, but they were never anything that would pay me past that one deal. So I'd do a
Mm-hmm. Right.
deal, get paid. Oh man, I got to go spin plates again. January hits and I'm going, I got to do all this again this year to hit my goals. So
Mm-hmm.
we trademarked the three payday system, which is how we exit properties. But the long and the short of it is it's upfront money, which you get when you do a deal normally in real estate. Great.
Mm-hmm.
Then once you do that, you launch a cash flow stream every single property for two,
Mm-hmm.
3, 4, 5, sometimes 10 years. And then of course you have the long-term cash out, which is kind of the wealth building side. So
Mm-hmm.
those three paydays are really a cool business model for you and I to go do anything. I'm going to open a restaurant. That's cool cash flow, right? So
Mm-hmm.
that's kind of like the 10,000-foot view. I can go back to any piece of that if you want.
Yeah, absolutely. And I know you've taught probably thousands of people around the country your three payday system there, which is kind of like a lease back strategy, a bit of seller financing there. So why don't you just dig into that for a second and give us the highlight of kind of what you preach there, what you teach there?
Yeah, and I always got to give a disclosure with this because we exit mostly, for the sake of this show, not getting too advanced, we do exit mostly primarily, at least the first look at a rent own.
Mm-hmm.
And I can tell you guys, the listeners, that even more so than over a decade ago when I started doing it aggressively and laser focused, that there are a lot of people trying to do it. And I say
Mm-hmm.
trying because you can go on a podcast after podcast or radio show after radio show, and you can hear people in my space getting interviewed, and you will hear them publicly say, yes, I do rent to own. And I don't care if my buyers ever make it to the finish line because they get to
Mm-hmm.
install another buyer and collect another check. essentially.
Hmm. Hmm.
And I go,
Yeah.
okay, that's good. Maybe they got that covered legally, but morally and
Hmm.
ethically, it stinks. So our
Hmm.
model of rent to own is that we want to set the buyer up to win. We have stringent underwriting criteria to do that. And
Hmm.
now, despite that, do we still have some buyers that can't get to the finish line? Yeah, they have life events. 2 to 10% is our default. In the
Right.
marketplace, you probably know this number roughly. Others are getting about 20% to the finish line, like 80%
Mm.
default. That's awful. So
Right. Right.
just a disclosure there. So how it works is we're dealing with two types of people typically in the buyer end. We're
Hmm.
dealing with people that just left a high paying 5 or 6 figure, multiple 6 figure jobs that go, okay, I started my own business. Good for you. I'm an entrepreneur now. I'm not bankable for like 2 years,
Hmm.
seasoning, the banks
Right.
call it, 2 years of
Right.
time. I was
Right.
on the call last week. We actually did a webinar together with a note buyer. Guy does a
Hmm.
lot of notes in the United States. And he
Sure.
said, Chris, I heard that's getting worse for the seasoning. And I didn't know that. So I guess they're pushing that past 2 years now for seasoning.
Hmm.
Those are great buyers for rent to own. They have a down payment. There's your payday one.
Right.
They have a monthly strong income. There's your payday two because you're going to get their money. You're going to pay out less to your property owner or property, right?
Hmm. Yep.
And third payday is when you cash that property out and all that principal pay down accumulates on your side of the ledger, so to speak. So
Hmm.
that's what we do, yes, on the rent to own. That's a long answer to your short question, but I hope that
Yeah.
nailed it.
Yeah, and I like the rent to own, because I buy, renovate, and refinance and sell apartment buildings, and the sale process is a pain in the neck. We always hire a broker; they get their piece. I mean, I've bought and sold apartment buildings where I think the broker makes the most money, compared to us. I mean, the investors make good money, and but they kind of get paid first. The broker gets paid, and then like my company's like fix up whatever's left over. But we've also had huge wins there also. But yeah, I mean, it's a process. We just listed two properties, and there's a marketing timeline, and there's a negotiation of contracts, and then there's due diligence, and then they got to get their mortgage, and it's like a 6 to 8 month process to exit, an apartment building, and so it is a pain in the neck. So having your buyer lined up, not having to pay a broker, that really does make your business run smoother, and that's an interesting strategy. I mean, you have there. So and then they usually maybe get an FHA loan or a conventional loan to buy it, or it depends.
Both. Yeah, both. Regardless of what they're going to go get, we want to
Hmm.
set them up to win. And we do that by what? If they need seasoning, it's easy. But if they need credit
Hmm.
repair, that's the other piece of the buyer equation that we
Hmm.
help. Then we
Hmm.
put them through that. And there's a mortgage ready plan. And they might go out and get some get VA. But regardless of what they're going to get, and regardless of
Hmm.
what they're being told they have to put down, we're
Yeah.
looking for that 3 to 10% range bare minimum if everything else lines up perfectly. And if it's
Yeah.
going to be a jumbo loan eventually, we want them to go have a plan with us to get up to 20% before they go for their mortgage. Again,
Right.
you're setting them up to win ideally, right? Unless they have a
Yeah.
life event.
Yeah, it's incredible. I mean, then that person can then start building wealth by owning real estate,
Yeah.
down the line. So that's a really nice strategy. So I understand how you get paid on the back end when the tenant buys the property from you with the rent to own. I understand how you get paid the cash flow. The tenant pays you rent and you pay the debt service and other costs. And ideally, there's some cash flow left over every month. And then, of course, same idea with owning apartment buildings and any type of real estate. But how do you get paid up front? How's that first payday happen?
Yeah. So picture that class of because there's a boom in this right now. People leaving the W-2, right? The
Yeah.
record
Okay.
numbers. I mean, since COVID, I think they've been going up, 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 up. They're starting their own
Hmm.
businesses.
Hmm.
Well, they
Hmm.
have cash. Lots of them come to us and they go, I didn't even know. I went to the bank. I got all this money in the bank. I used to have this great income. I'm not bankable. It's like a
Hmm.
big surprise for them. So that down payment they bring in, that's non-refundable. So if it's a
Hmm.
$500,000 house and they're putting down 50 grand, that's your payday one. We had a
Hmm.
student, Rick. He's now in his I think he's well over 1 million in his paydays, but his first deal with us. Now there's some luck involved, right? His very
Hmm.
first deal, he put a buyer in there. They were 18 years old. They started a paving company. The
Hmm.
bank wouldn't finance them. They have tons of cash coming in, but they didn't
Hmm.
have long enough in the biz. But their
Yeah.
parents had been in the biz, so they knew the biz. So
Hmm.
they put down 90,000 for the payday one. So
Wow.
picture this guy was working for the government 30 years. Rick was my
Hmm.
student, my community member. He gets his payday one. He's like, oh, okay. So now he structures three more deals like that for strong
Hmm.
payday ones and
Hmm.
left his job. This 30
Hmm.
years with the government. So the
Wow.
payday ones can be a game changer, as like you and I are always used to getting that one check, and then the
Hmm.
rest of them are in play for future. It's pretty cool.
So that's more than a security deposit. That's a down payment on the purchase of the home.
Oh
So when
yeah,
you go to buy it
directly related to
years.
the purchase. Like if you and I
Yeah.
bought a home today and we put down 100 grand and we
Hmm.
close next month, same
Hmm.
with us.
Yeah.
That person put 90 down and they cashed that out. That deal cashed out for them.
Hmm.
So probably 26 or 28 months later, they had a 36-month term. They cashed it out for Rick, and Rick got his
Right.
opportunity.
Right. Now, do you like take part of the rent and put it in escrow and then like apply it towards their closing costs, or like how creative do you get with that whole side of the rent to own
We
stuff?
haven't had to. Does that mean somebody couldn't? It's a great question. No, I mean, you want to get creative to help someone get their financing, you can, but we've never had to do that. We
Right.
do have what we have a little equity builder. We call it Equity Enhancement Program, EEP. What that means is if you're a buyer,
Hmm.
we don't give you credit for principal. However, if you
Hmm.
can see your way to coming up with extra money any one of the months, so hey, I might do this monthly, I might do it once a quarter, and you put down up to $500 a month, we will, and investors do what they want, and our family team, we match that off the price. So if we pick up an extra 500 from you this month because you wanted to pay down more on your deposit, we will
Hmm.
credit the price $500.
Mm.
So we can't give you double credit on the deposit because banks won't allow you to, but we can give you
Right.
credit on your deposit and then
Right.
credit the price $500. It's incentive for them to put more down, gets them more
Yeah.
invested, gets them better shape for the bank. And what does it do for us? More cash flow.
Yeah,
More
it gives you more money up front. Yeah,
yeah.
got it. That's interesting. And then, so as far as owning these properties, how do you usually own them? Because you have a lender then normally on the assets as well, right? So let's say it's like a single family home, you renovate it, and what do you like try to refinance out, or how do you hold on to them long term?
Okay, so a couple things there. First, if it needs renovation, I was going over one with my community member today, Judy.
Hmm.
We don't do the renovation as long as it's habitable. We're
Hmm.
going to come back on as a rent to own, and that market's huge. Builders and handymen that don't get financing, because they hide a lot.
Right.
That market is enormous for us. So we don't do the rehab. We pass it along to the buyer.
Hmm.
As far as financing, we never get a loan.
Wow.
So if I buy your house on a financing, I'm making payments to you. If I
Hmm.
buy your house subject to the existing financing, the loan you have in place stays in your name, even though I buy it, and I'm
Hmm.
making payments on your behalf to the bank. So I never sign on a new loan or refinance. Now I just
Wow.
wait for the buyer to cash us out.
Wow. So the magic is, or the strategy is really finding someone who's willing to work with you, a seller who's willing to work with you and holding that
Bingo.
note,
Yeah.
doing a subject to. They really have to trust you that you're going to execute on your business model. You're going to keep paying that mortgage. And also it's a good tax strategy for them. They save on taxes at the time
You
being. They have,
nailed it. You nailed all the benefits.
yeah.
Like, yeah. And so
Hmm.
on you get two different avatars here, right? The
Hmm.
free and clear seller, they're not in financial straits. They just want the most money, estate planning and tax planning. I bought a
Hmm.
building that way. Probably after I was on your show, I bought my commercial building that way.
Hmm.
Very savvy real estate investor said, I want owner financing, Chris. The realtors don't get it. They're bringing me offers. I don't want a full price offer in cash.
Hmm.
I want
Hmm.
it terms. Now, the other side avatar is sub twos that you just hit.
Hmm.
Are they usually stressed out? Yeah, they're usually completely different. They like need closure now. So yes, they
Hmm.
have to trust you, but they also need a solution like yesterday, a lot of them.
Hmm.
So you're
Hmm.
talking about two different ends of the spectrum there.
Right. They might have trouble paying their mortgage,
Yeah.
now basically. So you're almost are you kind of doing like you're like leasing the property and then subleasing it, or you're how does that subject to I'm
Yeah.
not that familiar with. Yeah.
So three different answers to that. On
Hmm.
the owner financing, we literally buy it, right? And the owner's the
Right.
bank. So we buy it, then we go ahead and do the lease to own with the buyer.
Yeah.
On
Yeah.
the sub two, we buy it. It's in our name. Those are the two buy ways. And then
Hmm.
we do the rent to own with the buyer. The only time we don't buy it is lease purchase. So we do sandwich us between the seller we do a lease purchase with, and then we turn
Hmm.
around and rent to own it to the buyer. That's the
Yeah.
only one we don't own it. We control it,
Hmm.
cloud
Hmm.
title with a notice of option to protect us, but we only control that property. Now, for tax reasons, I set it third for a reason. I'd rather own it with all the benefits of depreciation and everything.
Yeah.
But when I was newer, over a decade ago in this space, there were a lot of sandwich leases versus owning. And then I learned the hard way 2 or 3 years later, wow, I'm getting whacked pretty good on taxes. So
Mm-hmm.
we twisted that up a little bit, but they're all
Yeah.
great as long as you plan accordingly.
Yeah, yeah, absolutely. And I've learned a number of times, don't let the tax tail wag the dog,
Yeah,
right. So the benefit of the sandwich strategy, where you're kind of doing a master lease on and controlling the asset, you really are limiting your risk
big time.
for, the most part. Because
Big
with
time.
seller financing, you are still signing a note, but ideally you don't personally guarantee it, or
Correct.
you can, and you're not going to the bank, so and then with the other strategy of kind of, also the lenders, I guess that you also have to work with the lenders for them allowing you to pay the note, right? And take over
Good
from it?
question.
Hmm.
The lenders, there's a due on sale clause on almost every loan, right? So the lenders, it's not something you're going to call and get permission, quote unquote. You just
Hmm.
have to, and we've learned over the years to do this more efficiently and legally protected better. You have to structure the deal. I call it papering the deal.
Hmm.
An attorney that does subject to deals, who understands the laws around Garment-Saint-Germain Act, which was in 1982. It goes way back. And it
Hmm.
allows them to transfer property without triggering the due on sale clause. So you have to paper it
Hmm.
right. It's in a trust. The owner's part of it, the seller's part of it. And that has been one case, and it was only a few years ago, was tried by one of our attorneys. One of
Hmm.
his investor clients had a due on sale come at them, and he took it to
Hmm.
court and won. Why?
Wow.
Because he
Wow.
structured around the guy in St. Germain Act. So people
Yeah.
always go, well, what about the due on sale? Do it right and pay the
Hmm.
bill too, right? Pay
Hmm.
the mortgage every month, and you wouldn't have that issue.
Yeah, yeah, that's interesting. So the seller moves into a trust, and you all become part of that trust, and now essentially you're really not transferring title. You're just being added to a trust that you both, and then you're the managing member of the trust. So you get to control the asset. That's
Yeah, now disclosure, Aaron. For gosh, since 2013 till about 4 or 5 years ago, we
hmm.
weren't that sophisticated with them. We were just putting them in our LLC.
Hmm.
Then we said, well, wait a minute. An attorney said to us, why don't you put them in a trust, not the protected trust we have now? Why don't you put
Hmm.
them in a trust that's labeled the street address in the seller's name? So it'd be, 123 Jump Street,
Yeah.
Fragnito Family Trust.
Hmm.
Provide a level of, oh, that must be doing that within the family. So
Hmm.
now instead of just labeling it like that, we actually do it with the family. So now you protect
Hmm.
it.
Right, right, right. And that probably is less likely to trigger any issues with the bank.
Big time,
It's
yeah.
right, right, exactly. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. That's interesting. That's interesting. All right, Chris. Wow. So you've really learned a lot from your successes and mistakes over the last 2 decades here in real estate, and even longer than that, really 30 years or so, right? So,
Yeah.
and you still have a lot of your hair for me going through so
Yeah, but
much.
it's not the same color.
Yeah, yeah, definitely not. Definitely not. So that's good. Eat right, exercise, it's important. That's exciting. So, what are you seeing in the market? A lot of people these days, they say, "Oh, I can't find a deal. Residential real estate's priced too high," or
Yeah.
"Oh, I'm not going to invest my money. I'm going to wait for prices to come down," which is the one that gets me laughing because I'm like,
Yes.
if you understand supply and demand, then you're
Yeah.
basically going to be waiting forever because prices are just going to keep going up because the supply is going to be shortening, actually limiting, because the building frenzy of low interest rates is coming to an end, and we haven't been building for the last 2 years. And what you're seeing now is inventory coming on market from the COVID days. And
Yeah.
it takes a while to build, it takes a while to get it leased up. But into 2026 here, we're going to see less and less inventory hitting the market, which means prices goes up. Inflation seems to have been tamed for the most part. I don't see any
Yeah.
huge interest rate bumps in the future by the Fed, probably more the contrary. So I think prices are going to keep ticking up here. But what are you seeing in the market? How are
No, I agree. I put a big stamp on what you just said, and for all the above reasons, I love what we're doing in the creative world and what you're doing, because all you have to okay, a couple things. You have to be aware of what you just said, right? Like,
Mhm.
do the masses do whatever it takes every day, no matter how hard it is, to accomplish all their goals? No. So unfortunately, they follow media, and it's like I call it sheep, right? They just kind of follow. Well,
Mhm.
if you know the masses don't do that, what do you follow the masses for then? It's just
Mhm.
you're heading down the wrong path. So
Mhm.
having said that, well, how do you equip yourself? Well, and
Mhm.
I'm biased, but in my opinion, you learn the creative real estate niche. It's not new. It predated me and you. It predated banking, right?
Mhm.
So learn that so that when the market pivots, you're comfortable. Not only are you comfortable, you're excited. My wife always says, Aaron, I've been married 39 years. She'll say, she'll see something in the news or the interest rates change or something changes in the market. And she'll say, how does that affect you? Or how's that going to affect the students? I go,
Mhm.
it's great as long as they know how to pivot, right? So as
Mhm.
long as you understand creative and you know what ponds to fish in as the market shifts, you're going to collect deals no matter what. It doesn't matter. It
Yeah.
really, truly doesn't matter. And remember, you're never signing on a loan. So don't
Mhm.
stress out about it. And to your point, does the market in general, if you historically go back every year and do a 10-year look back, does the market typically go up over 10 years? Everybody would agree with that. Then what are you
hmm
getting caught up in the weeds for then? Just learn
Right.
creative real estate and go after it.
Yeah, markets go up, markets go down. I mean, the one thing I wish I did was buy more real estate when I started in this
Everyone says
industry,
it.
2010 to 2015, man. I mean, I remember I used to go to sheriff sale auctions like 2014, 2015. First of all, no one was there. It was me and like three other investors, and we all knew each other. So, yeah, that was nice. I won't go into detail there, but basically, it was a great opportunity to buy great deals for great prices, and so we would go and scoop up deals for like 40,000, 60,000 a pop. These are like three family properties in Newark, New Jersey that are now selling for 700, $800,000 renovated. So, we would scoop them up and then we'd go and flip the contract, sign the contract. We'd wholesale the bid out
Now
to
you're kicking
other
your head, right?
investors.
Going, oh man,
And man, assign the bid out for like 100,000, make $50,000 on a Tuesday and then do it again the next week, and it was just like, man, I think we made over $1 million wholesaling deals, 2015 or something. So great opportunity, made hay while the sun shined. But yeah, all those properties are so cheap back then. They're going for
yeah,
so much right now. If I had the resources I have now and the relationships I had,
yeah,
boy, I would have just bought a lot more real estate. And if I knew then what I know now, of course. But you're absolutely right. Buy in good markets near population centers, own them, be a good landlord, take care of them, and in time, rents go up, property values go up. Real estate's an incredible asset class to own long term. Do you invest in any multifamily, or are you more so in the single family space?
yeah. No, I do. I'll give you a couple of answers to that. I teach one thing and then I broadly do some other things. Why? Because if I
hmm
teach anything but start here, teach
hmm
the new person, what do? You know this now. They'll go what I call drilling wells, shiny object. They jump from thing
hmm
to thing to thing to thing to thing, and they
hmm
they never hit water, right? That's why I call it
Yeah.
drilling wells.
Yeah.
So I teach that, but in their journey, will they, through our coaching and or an accident, will they run into multis? Will they run into mixed use? Sure. So on our end, we have bought anywhere between 4 and 15 unit buildings, owner financing, no money down. We bought, I told you my office building that way because it fit to his goal. Like you can buy any asset class, you can buy boats and cars and planes on it, and they do on owner financing. So yeah, any
hmm
asset class
hmm
whatsoever. And to your point with the markets, Aaron, I didn't tell you this story. So back in, man, this would have been 95-ish, way back. There's a nice little niche around colleges. I still to this day love it if someone wants to get into it. In the college niche,
hmm
you're renting to kids who the parents co-sign, and they prepay. And my partner, who I had about 13 of those with by Holy Cross College, said to me about a month ago, we went to dinner. He said, can you imagine if we kept them? They're going for like $1 million now, these three families. We
hmm
had like 13, 14, whatever we had of those
hmm
running a nice little business, and we bought them like in the twos and threes.
hmm
And of course, we were fat and happy selling
hmm
them in the fours or fives, but $1 million now. So you're not going anywhere if you do
hmm
the right thing in real estate, right?
Yeah. Yeah, yeah. And as I work with family offices and ultra high net worth individuals, that's really, most of their wealth is in real estate and they look for cash flow. They look for long-term investments. They look for tax strategy. And that's how you truly build wealth, holding on to assets long term, utilizing a 1031 strategy, utilizing the cost segregation strategy, and
Yeah.
creating, revenue streams through that real estate. And that's what we focus on, with our investors. So it is certainly a great strategy, are you still actively doing a lot of the coaching and the different like events and seminars and things like that for your real estate on your terms education there?
Yeah, so I personally, if that's what you're asking, still coach a little bit of we have 4 levels. I coach the third level a little bit, and the coaches handle them now. We have three amazing coaches, plus my son and my son-in-law. And then
hmm
I will launch a private club every couple of years. So I have what's called the President's Club right now, and I coach them. There's only 6 of them. We are on nonstop because I love doing deals. Like I started the company doing deals, and then my son-in-law was more, hey, let's scale this. So I love doing deals. It's where my love of the business is. And yeah, I love coaching them because why? They're committed. There's
Yeah.
6 committed people. You get on the call and they're doing deals. So I love that
hmm
level. And I'll do that every now and then when I get bored. I'll launch another private level, and that's what I'm doing now.
Yeah, yeah. So kind of like quality over quantity, the guys that are actually doing deals. Because I feel like sometimes the coaching model is to just, charge like kind of a small upfront fee and then like just, a lot of the people don't end up not doing deals. But I feel like with you, you actually really try to get your students to actually do deals. And that's important to you,
You hit a big one there because when I started, there was like 4 or 5 of us in the creative world, and I could name them, and I knew what they were doing.
Yeah.
Now there's just a plethora of people out there. But here's the challenge. And you and I see it on social now. They're getting bombarded by the get rich
Yeah.
quick tomorrow, the rented Lamborghini and helicopter, and it's just a
Mhm.
bunch of craziness. So when I went looking after I was broke after the crash, I couldn't find anything back then that said, "Hey, here's what you can learn, but I'll also come with you and do deals, or I'll also come behind and support it." That's what we do. And frankly, no one's
Mhm.
doing it. And that's a
Mhm.
bold step. Nobody's doing the model we're doing to get in the trenches, lock arms, and actually do the deals. Because that's where the headaches come up, as you know. You're doing it a little different than
Mhm.
being in a seminar. You need help. You need someone locking arms with you.
Yeah, yeah, exactly. And that's it, because just the books and the CDs don't only get you so far. Deals are intricate little like, they're almost like live little beings. Everything changes, this little detail, that little, you're
Yeah.
dealing with human beings who have life events, so it can be very detail oriented, and a coach to kind of get you through that process is very important. That's great, Chris. No, I'm glad to hear you're doing well. I've always loved your model, and I've always been curious to learn more about it since we connected. Boy, I think it was kind of 2021 or so. It was like right during the pandemic,
I
actually.
think it was right during or after COVID. Yeah.
Yeah, yeah, exactly. And how can people reach out to you and learn more?
I want to get everybody I'm big on free,
You got
Aaron.
going on there?
I want to give everybody some free stuff because I just because of the frustration in the market and them getting bombarded, I'd rather give them some free stuff. So go to
Mhm.
wickedsmartbooks.com/Aaron, wickedsmartbooks.com/Aaron. You'll get a couple of our free bestsellers. Instead of going to
Mhm.
Amazon, we'll ship them out right from the office. And it's not one of those offers that says, "Hey, free book," and you got to put in $8 for shipping. It's free. You won't pay 10
Mhm.
cents.
Wow.
Secondly, you could go to, if you don't mind listening to me from New England for another 30 minutes, go to my free workshop it's been filmed. So you can just watch it at your own leisure. smartrealestatecoach.com/masters with an
Mhm.
S class, master's class. That should get you
Yeah.
going with the free stuff.
That's amazing. Yeah, and send me those links. We'll be sure to put those in the show notes for everyone as well. If you're watching us on YouTube or a podcast platform that you can click on there. And that's amazing, Chris. I love the fact you're giving away free books, free classes here. Two websites.
You blipped out a little bit. Sorry about that.
Yeah, one more time. What are those two
Yeah,
websites?
yeah.
Just real simple.
Sorry, wickedsmartbooks.com/Aaron, and that'll get you the free books. And then for the workshop, smartrealestatecoach.com/masters class.
Awesome. All right. Thank you, Chris. Awesome. Thanks for coming
Hey,
on here. And yeah, to our listeners, Chris is the real deal, my friends. No money down real estate acquisitions, crazy types of acquisitions here. So he's got lots of great ideas, and he's actually implementing it. And so that's what I like about what you have going on, Chris. And to our listeners, if you're enjoying this content, we come out with a new episode every 2 weeks. We have different guests on here, from professional athletes to tax specialists. We try to bring you, our listeners, the best here so you can build your business, build your brand, and most importantly, build your wealth so you can preserve your time and do the things you love, spend it with loved ones, and enjoy life to the full. So we're all about preserving and building your wealth here. A lot of our topics are real estate focused, but some are just in general business focused and wealth focused as well. So please share this episode if you're enjoying it, if you feel like there's someone in your network that would gain value from it. And give us a like if you're on one of our major podcast platforms or even YouTube. We are also on YouTube. You can Google People's Capital Group, or you can put in there Passive Cash Flow Podcast and check out all of our different content on YouTube. We also have like additional videos on YouTube also you can check out that we don't put on the podcast platforms here. So I'm Aaron Fragnito, co-founder of People's Capital Group. We've been helping people build and preserve their wealth in New Jersey real estate for over the last decade. So if you want to learn more about what we're acquiring right now, we're buying a building in Hackensack, New Jersey. Very excited to get this thing closed and get it moving forward. We have a few spots left, although we're about 90%, over 90% filled on our recent offering, our private offering out to private investors. But if you want to learn more about that, you go to peoplescapitalgroup.com and set up an appointment with a member of our team. We can see if you qualify for one of our investments here in New Jersey. Thank you so much, Chris, for coming on the show. Be
thank
well,
you.
my friends.
You too.